Hey everyone, I'm going to try and explain a little bit about dividends and why it's in the debit column of the debit and credit table. I hope this makes sense to you. I'm doing this also for my sake because this chapter has been really confusing for me to try and figure out what's going on with debits and credits. So everything in this chapter is really based off of the basic accounting equation, which we see here, the assets equals liabilities plus stockholders' equity. And we know that this equation always has to balance, which is why when you do the debit and credit trial balance, that's when you figure out whether or not it does balance. So for the specific question of dividends and why it's in a debit column rather than the credit column, it really has everything to do with this retained earnings. So stockholders' equity is going to account for retained earnings, common stock revenues, expenses, and dividends. Now, on the retained earnings chart, it already accounts for the dividends. You can look back at the retained earnings chart and you see that we take the beginning retained earnings, we add the net income, and then we subtract the dividends. So if we all include the dividends here, that's double accounting for the dividends, and it'll throw off the entire equation. So because the retained earnings is listed as a credit, and we've already accounted for the dividends, when we add in the dividends here, it has to go in the debit section to account for already being taken out in the retained earnings section. So hopefully that makes a little bit more sense. And maybe I'm completely wrong on how this all works. Hopefully we can get some clear direction from somebody who actually knows what he's talking about, such as our professor. So let me know if this makes sense or if I'm totally off base.